chasing money too early without firming up your own conviction on your business model and segment will make you vulnerable to being pulled into different directions. If you start thinking about the scale at the very first level, when you don't have a customer model proven, it is more risky for you, and if you raise that kind of capital, you might end up prematurely scaling.
The most interesting conversations on entrepreneurship don't always come from founders. Sometimes they come from people who have studied systems, backed ventures, and taught the next generation how to think. That's exactly why today's conversation is a special one. Hello, everyone. Welcome to a School to Startup, brought to you by Traction, a private market intelligence platform that's been supporting global university ecosystem for over 12 years. Through our university partnerships, we work with institutions driving innovation and entrepreneurship, and this series highlights the academic leaders making that happen. I'm Harish, your host today. We are joined by Dr. Priyanshu Gupta, Assistant Professor, IIM Lucknow. Dr. Gupta, it's great to have you with us today.
My pleasure. Thank you for the opportunity to converse.
Great. You've had a very unique journey across consulting, impact investing, policy, and academia. What pulled you into these different directions?
Wow. Okay, that's a little bit of a longish journey, because it's been a journey for me, a very personal, relatable journey, and I'm hoping many other students can actually undertake such a journey. So the start is pretty usual mainstream Indian middle class path. If you're good at something, you end up in engineering. If you're doing slightly better and if you want to do more, you end up doing an MBA. So I did my engineering from IIT BHU, then MBA from IIM Bangalore. And it is at IIM Bangalore that I really got exposed to a lot of diverse thinking, a lot of projects. I picked up quite a few areas where which at that time seemed benign, but ended up shaping my career trajectory. So I picked up microfinance, which was the flavor of the day during my B school, which is 2006 to 8. I'm pretty sure this generation will not even recognize that period of promise and hope and so much going around. And the second interest I cultivated there in itself was public policy, infrastructure, governance, and all of those. So, but straight out of college, I took a more mainstream placement. I got an opportunity with A.T. Kearney doing strategy consulting. And again, a great experience working with a whole host of sectors, infrastructure, telecom, retail, and all kinds of things. But then I came across this very interesting opportunity in impact investing. In fact, we were not familiar with that word or a terminology then, and it involved a massive pay cut to actually enter that sector. And most of my batchmates and friends were like, why are you doing this? But then I think I'm so glad I got that opportunity at the time it did. Because today, 15 years, 16 years down the lane, this is one of the most sought after roles from campus. And that is, I would say, the coming to age of the agenda of sustainability, impact, of the way of thinking where we value non-financial indicators as well. And not just the finances, which was the mainstay of business management education in the early 2000s. Right. So I had a great time with Local Capital, which is one of India's oldest and the largest social impact investors. I was very fortunate to have invested in quite a few flagship deals, which we now see as small finance banks. I was focusing on financial inclusion, skills, livelihoods. One of the early investors in that space. But then in 2014-15, I had this little bit of a self-reflection that impact investors in India were making more money than actually the commercial mainstream markets, right? So which sought me thinking as to why this is happening. And on the other hand, I was also seeing the limitations of the sector, where one was seeing that only some kind of models make sense for investors and others don't. And I think that's just the way the Indian markets are deepening, both across sectors and across geographies and across segments of population. So just on that exploratory journey, I did a little bit of policy work, and that took me to my PhD at IIM Calcutta. And then very immediately once I finished my PhD, I came across IIM Lucknow's sustainability department. We are very proud to be one of the very few IIMs to have a dedicated sustainability department. We also run a 2-year MBA in sustainability. So this was a natural choice. It's been a good 5-year journey for me here. So the entry into academia, I don't think I could have planned. It just panned out the way it did, but that is just how careers are crafted and cultivated in times like this. And yeah, so very excited to be in this space at the moment.
Amazing. So from your experience in impact investing, what do you look for a first, or what do you look for a first in an early stage founder or startup?
Yeah, see, early stage founders, it's always about the people, the intent, the mindset, the resilience of the founders. But other than the qualitative dimensions, one is also because India is still a relatively underdeveloped market, especially when we talk about the sustainable or the social, the climate adaptation kind of projects, or the small renewables, not the, so now the business case for the larger sectors. So when so complementing the mainstream VC focus on the promoter, the execution, I think a lot of work goes into exploring these markets, these industries, and figuring out the business models and where the business case works and where it doesn't. Because we're still a low income economy. We're still a high transaction cost economy. So one will have to come up with a lot of innovation around these two dimensions to really ensure that I'm able to build in scale, impact, as well as a commercial viability into a business model. I think that's a challenge that most founders face. That's a challenge that investors have to grapple with. But that's also the exciting space, because that is where decision making and management decision making actually makes sense. So what started as a practitioner, now I think it becomes my research as well as teaching interest. So yeah, and India also has changed over the last 10, 12, 15 years or so. So many of these things are changing, which makes it a very exciting space.
Interesting. And when it comes to young founders, right? So what do you think one mistake they often do when they start thinking about funding too early?
Yeah. So I think part of it is just about how much of a conviction in your business model comes from you within versus how much are you looking for an external validation, right? Now that's a maturity curve of a founder or a young entrepreneur. And I see this happening more with a bunch of founders who are in their mid to early 30s than in the founders who are more in their 50s, right? So because chasing money too early without firming up your own conviction on your business model and segment will make you vulnerable to being pulled into different directions. But a young founder who has found their feet, who understands the market, would be able to actually manage any kind of investor. And I think the investors also look for that kind of confidence and conviction in that market. So chasing money too early. See, one, I think this early itself is a misnomer, because I mean the investment life cycle is such that uh, uh, you a founder's journey is about how do I manage risk at my particular level, right? So the traditional life cycle of an entrepreneur is that first the risk is at the idea stage, then the risk is at putting that idea onto a piece of paper, which is the business plan, and getting the team around it. The next is actually getting the first customer and all of that, and then the unit economics, and then the scale, right? If you start thinking about the scale at the very first level, when you don't have a idea or a customer model proven, it is more risky for you, and if you raise that kind of capital, you might end up diluting. And second, you might end up prematurely scaling when the basics are not in place, right? So that is generally a tension that most entrepreneurs have to grapple with. And it's also, I think, one of the key messages that we try to deliver when we do these entrepreneurship incubation programs. I'm also involved with our incubator, a very successful incubator at IIM Lucknow. But also I serve on the board of a couple of impact funds. So I think that's roughly my sense is that the more conviction you have and the more sequentially you think about fundraising, I think is a better approach. These days, at least, you have mentorship ecosystems reasonably well developed. So very important for a young founder to find a good mentor and find a good cohort for them to actually a peer group of friends who might be able to appreciate and understand the challenge and also be a mirror to them. I think more critical than ever.
That's really a good point. Talking about sustainability policy and startups, a lot of startups today want to solve real world problems. But in your point, like, how important is it for founders to understand policy, institutions, and a broader system they are building in?
Yeah. See, it's always been, so India has always paid a lot of emphasis on policy, but more so in the sustainability or the social impact space, where I think policy has an oversized influence on the nature of businesses, right? And so far, I think, and Indian policymakers are also evolving, but so far the mindset with which startups or entrepreneurs navigate policy is it's a necessary evil, it's a pain, right? It's a burden, it's a compliance, right? And so has also been the policymakers' outlook, right? We know best what is for the sector, right? But I think luckily a lot has been changing. Indian policy architecture itself is becoming more and more nudge focused than a push focused, right? Where we are trying to build in incentives rather than regulatory sticks, right? So now, and we see this all through. So whether you see this emerging in the new carbon markets ecosystem that we're putting up, the new sustainable finance guidelines, the green bonds, and all of those kind of things, right? And in general, I think the policy is also evolving towards creating the best incentive structure for the models. On the other hand, entrepreneurs also are at least need to, because many of the business cases in these new age sustainability and climate sectors are very integrally dependent on the regulatory dynamics, right? Especially when we come to climate change, both adaptation and mitigation. These are still very heavily regulated sectors, right? So one will need to think of policymakers as ecosystem partners with whom you can collaboratively shape the incentives of the industry. In fact, the regulators these days are also more open for conversations than they used to in the past, right? So I think somewhere we need a shift from uh, a disclosure, pressure, push-based systems to a more incentive, reshaping the business case kind of a architecture. The policymakers also need to learn, because we need to really strengthen our green finance guidelines. Because at this stage, some of these work for large companies, they don't work for smaller companies, right? And they don't necessarily always work for startups. So there, I think I would say the policymakers need to evolve more. And the entrepreneurs need to react. But when it comes to entrepreneurs are very good at showcasing their impacts, the depth of the potential that the idea has, right? So some of that can also lead to. So I'll take a very concrete example, right? So one of the best examples of a very carefully cultivated policy-based entrepreneurship ecosystem I'm seeing through a very close friend of mine who works with a fund called Alcisar Impact. So they work in some of the most difficult geographies in India, right? So Ladakh, Sikkim, Nagaland, Mizoram, right? Now these are heavily regulated entities, right? Any capital is scarce, and there also comes the connotation of these being conflict areas, or geographies where these are small capital bases, right? But you can actually build fairly successful enterprises there in collaboration with the local ecosystems, which might start off as a little bit of a confrontation, because I mean, if you do a startup in Kashmir, you will invariably need to encounter the state, right? But then the state is also very welcoming of a startup that promises to transform the local economy, right? So what this fund has been doing is a place-based investing strategy, where they bring together the policymakers, the university ecosystem, the young entrepreneurs, to create a local ecosystem. And I think from what I recall, I think 6 or 7 of India's states, the first FDI came from this fund, right? And that itself is a lot of opportunity. So policy can be seen as a problem, as a bottleneck, but also can be seen as an opportunity to forge that relationship. So it requires work from both sides. It's not going to happen automatically. Policymakers need to learn from the entrepreneurs, but entrepreneurs also need to be willing to engage, right? And I think we have enough promising models here where promising entrepreneurs have been able to shape the local policy ecosystem around a success. So and I think Shark Tank has done a world of good in bringing legitimacy to entrepreneurship, in making entrepreneurship the aspiration of the younger generation, which probably even years back, entrepreneurship was not the aspiration. Your aspiration was to become an Ambani or an Adani. But today, I think every youngster aspires to be part of the sexiest startup on the horizon. So I think these things are work in progress. Yeah, I'm not sure I answered your question clearly, but maybe.
Yeah, definitely. Zooming out on universities and entrepreneurship inside the campuses, in your view, what does a university need to get right if it genuinely wants to foster entrepreneurship and innovation?
Yeah. No, I think, see, universities have a very critical role to play, largely because it's the first. So I'll break it into 3 parts. So research, teaching, and I'll probably come to research later, because we underemphasize so much of that dimension, which also is critical. But let me just go with what I think resonates more with the university audience, which is the students, the entrepreneurship community, and the parents of the students who join, right? So I think the first thing that universities today need to do is becoming more experiential, more hands-on. And largely because I think one needs to, in universities at least, realize that the world around us is changing faster than the knowledge bases, right? So that humility we all academics need to carry, right? So, and that is the world our students are stepping in, right? So can we really teach them a lot of theory and do that? No, the careers are changing fast. The dynamics, the market dynamics, the overall ecosystem is changing very fast, right? So what we can really teach them is adaptability, the ability to learn, right? Too often in India, university is looked at like कि IIT चले जाओ, life set है. You enter an IIM, then you are forever placed and all of that, right? But that has not been the experience. And luckily, I now, it's been 16 years since, actually 20 years now since I entered the B school. I can see the careers that were on the horizon don't even exist today, right? So fintech was not on the horizon then, right? And today fintech is bulk of our financial sector, right? Same climate tech, ESG, agri was supposed to be a low-key sector. It's nothing as aspirational. Nobody wanted to be in agri, right? But today that is emerging as one of the fastest growth areas in the ecosystem, in the startup ecosystem at least, right? Or even a traditional role like product manager. This role did not exist when I was in campus. This role is the last 10-year creation, right? So all of this is evolving. So all of us have evolved, right? So this notion that once you enter a university, you gain knowledge forever, that doesn't work, right? So what universities can do and should do, and I think a lot of us are trying to do that well, is orient students that it's firstly, it's a lifelong learning. Two, you need to build the skill to be able to learn quickly. And quickly where you do not compromise on the fundamentals, because the premium on the core, the fundamentals, the theory is higher than ever before, because when everything else adapts and AI makes knowledge almost a commodity, the premium on your depth of understanding of the core is the highest, right? But what we can do is then we very quickly need to reorient our students to say, okay, this is theory, but let's start applying it into practice from day one, right? So the universities need to do a lot more hands-on projects, right? A lot of learning today is project-based learning. It is live projects with some of our industry partners, or in our case, we are very lucky to have an in-house incubator where we have close to 200 startups. So many of those ideas can get tested. Our students can actually engage with those ideas. Second, even in our curriculum, we have designed, and we are changing very fast. We are designing these project-based components for experiential learning. Second, I think a lot of emphasis has come on simulation-based problem-solving approaches, right? And third, I think one thing that has changed at least big time in the last 5 years is the need for a structured data analysis. Over the last 20 years, I mean, earlier management education, a lot of it was information gathering, right? You go and find research information. Today, the information is ready, but you need a structured data analysis. And that is where platforms like Traction can just crunch your learning quite a bit. So for instance, I do a project in my impact investing course that I teach, right? Their end deliverable by the end of the course, and while I'm doing all the impact investing theory, the end deliverable is to create a great investment memo, which you pitch to a set of funders, right? And it has to be professional. It has to be a real life, right? So how do you do that? You crunch that entire investment life cycle and say, okay, how do I validate this is an interesting market, right? So you draw on the market trends, the investment trends. you can just do a pull up on Traction, and you can very easily see which sectors are growing faster, where do you see the more deal activity, both volume and value, and there could be insights there. And within them, which business models. Luckily, Traction gives a very beautiful segment of within fintech. There are at least 20 business models that I can see there, right? So which business model is growing and why, and who are the big players investing in that, right? And what are they looking at? So that's the first step, which is market analysis. Then you do the business model analysis, right? So then again, you can look at the financials of this company, you look at the peer comparison with other companies in that sector, and then you also validate it by inputs from the industry experts or the faculty very often. Why is it that this model, what are the key success factors in this industry, and why do you think this company has it and the other company doesn't have it, right? So and then a full financial analysis and all that. So all of this is a live simulation of a real life experience where structured data set becomes a very great tool. Now, the moment these students enter the industry, they are exposed to all the terminologies and the theory, etc. But they're also from day one able to be comfortable with data, comfortable with finding out the comparables, finding out the messiness of the valuation techniques, what we teach in class versus what actually happens. In practice, you've already explored, you've already understood the tensions there. Right? So I think that is the other area where I think a lot of effort needs to go into the university education system. I'm not saying we have reached that level, because I think again, India has a very uneven quality in the higher education space, but and also these project-based approaches are relative, or simulations are relative new to our curriculum. But I think that is where we are doing AI-based projects, right? So a lot of that is I think what we need to do.
Amazing. You also informed that you've been using Traction across different use cases and in the classroom. So how has your experience been with the platform so far, and where have you personally found it most useful?
Yeah, so the use cases for me are largely, you say, twofold, right? And more in as a teaching pedagogical approach, I have found Traction to complement some of the analysis, the structured data analysis that students can do. A second interesting use case, which I have started using, is that it's a great repository of capital flows and the market trends. And so because my research work currently sits in the intersection of capital flows, firm behavior, and sectoral transformation. So I'll probably talk about two projects that that I'm working on, where I have used Traction in different forms and shapes. So first is I'm looking at the healthcare industry in India. Everybody is commenting that it's one of the most attractive opportunities. So Bain in 2025 says that Indian healthcare is the global hotspot of market opportunity, because it presents the best risk return trade-off anywhere in the world, right? We get 30% of all Asia Pacific transactions in India, right? So I wanted to dig deeper behind that and see how this financialization is transforming the healthcare space, right? So this project, then I say how does increase P, VC, DFI, all kinds of investors actually, how is it reshaping the incentive structures and the overall ecosystem? So Traction came of use to me in mapping the different investors, their deal flows, the kind of business models that they're investing in. It helped me understand the kind of consolidation that the industry is witnessing, right? The acquisition, the M&A activity, large hospital chains becoming larger, and the standalone kind of getting acquired or all of that, right? And it also allowed me to see which sectors within health are actually seeing growth. So for instance, one of the sharpest graphs I was able to plot from Traction data was this whole preference for dental care and eye care chain as a standalone investment, or very large tertiary care and all of that. So one then starts seeing the next level of questions. Why is this happening the way it is happening, right? So there, I think it becomes more of the ongoing qualitative, quantitative work. And then looking at what does it mean for outcomes? What is the kind of cost escalation that you're seeing? The financials of the different players, how they look like. The preference for asset-light models, the preference, the concentration of investments in tier 1 cities and in select specialty, so dental, diabetes, and those segments. And what does it do to healthcare as a public good, right? So it could be it could actually be skewing in market incentive structures. And I think that is the role of academia, to really understand how the ecosystem is shaping, what drivers is leading to that. So I think that is one research that where I found traction to be incredibly useful, at least for the first level of the questions. The second one, again, I have used traction data to generate a good, with one of my PhD students, to generate a good database of impact investing transactions in India. How are impact investors behaving different from early stage VCs, right? Whether it comes to deal selection, like are they finding different types, so sectors, geographies, founders, are their investment timelines different? Do they come early? Do they come late? Do they stay longer? What kind of exits that they have? One area where I have been hoping traction can work upon, and hopefully we will see that someday, is a lot of sustainability research. We are not just tracking financial outcomes. So traction does a great job at giving me a good starting point of all the financial outcomes and financial sector behavior. But so much of today's data is ESG data, right? At some point, can we integrate that? And then one can do, are you doing these trade-offs? Now, a lot of that research now is, I am doing it through individual contacts, reports, and all of that. And I'm sure there will be a day when some of this data can also be imported onto some of these platforms. And I think that can become a holistic thing. So this is, in generally, I would have found traction very useful, because for me, early stage transactions, unlisted companies, and that is where I see most promising investment activity. To be very honest, I think we make a big deal about listed companies, but all of the innovation development is happening with unlisted companies, and traction is by far, I think, the best platform to provide that. So full disclosure, traction doesn't pay me any brand endorsement for doing this, but it's just that I think I found it very useful for my projects.
Amazing. Thank you for those inputs, and we are working on those ESG points that you said. Probably by end of this year, probably early next year, we should be seeing that on our platform too. Great. So before we wrap up, what is one message you would like to leave with students and young founders who want to build with both ambition and purpose?
Yeah. So I think firstly, it's just humility that you will, it's a journey, right? It's a very exciting and a promising journey. So one needs to be excited about it. We are also in a great space because India is a land of opportunity. India is also a land of problems. And wherever there is a problem, there is an opportunity to solve, right? So firstly, come to the sector with the right intent and the right motive, because the journey is going to be bumpy, right? And so one needs to be prepared mentally, have that resilience to be able to persist here. Right? Second, I would say, at least for I would say the students, right, need to build strong fundamentals. Right. In this day where you think knowledge is a commodity, AI can give you practically every answer. whether it's finance, economics, operations, strong fundamentals still matter the most, right? And it hits you when you are taking those decisions at very crunch points. You need to understand what a sunk cost means and its implications. What do you mean uh, trade-off? Because so much of our entrepreneurial journey or a management life is about navigating these trade-offs, and fundamentals are the only way you can resolve or at least typecast these trade-offs and be able to take that, right? The second need is to develop some kind of a data literacy, right? So one needs to be aware of all the data that exists, right? And the best possible way to structure and to be able to analyze that for meaningful insights, right? Because gone are the days where consulting could be lazy preparing for that. The premium on decision and managerial thinking is never been higher, right? So, but for that, uh, you need to focus on very quickly figuring out structured manners of data analysis to actually generate insights and distinguish information from insight. I think that is the right. The third, as I think I've already said, that one needs to be comfortable with ambiguity and trade-offs, more so in the sustainability space, because these spaces are only evolving. Sometimes there is a business case, sometimes there's not a business case. The business case can change short term versus long term, right? The business can change with the policy and without the policy, right? And there is a lot of structure around you, but there is also the agency that lies within you as an individual or you as a firm, right? So one needs to really be comfortable with trade-offs, the language of innovation, because innovation is about managing these trade-offs to come up with something new. It's not a research project. So, right. So as an entrepreneur, as a manager, you are not on a research journey. Your journey is to come up with the best possible answer in that context, right? So navigating these trade-offs, growth, profitability, ESG, impact, is a real life skill, right? Second, I think one should see our role as embedded into the overall ecosystem, right? So because you're not joining a career, you're not joining a defined skill set, you're not possessing a defined skill set, right? The only skill set you have is your ecosystem understanding, what we call adaptive institutional. So there used to be a time where you had IQ, they had EQ, you also had something called a creativity quotient, CQ. But increasingly, I think it's a ecosystem or adaptive institutional quotient, right? You need to be able to navigate your role, your skills, and your creativity to fit the different institutional contexts and environments that call onto you, right? Because real change, especially in places like sustainability, has to come from within the overall ecosystem and not just one player, right? So you need to navigate the entire thing, make those business cases where they may not exist right now, right? But you can actually bring those things, how to make it work for every single actor in the ecosystem. So that's a core skill that I think at least sustainability or the ESG space will require. So yeah, and I think just openness to some of this messiness is probably what one can do the best.
Amazing. Dr. Gupta, thank you so much for being part of this episode of Traction's Good to Startup. This was a truly insightful conversation on how universities can nurture entrepreneurial thinking, why founders need both curiosity and clarity, and how data-driven tools like Traction can bridge the gap between classroom learning and real-world startup action. Thank you so much for being part of this episode.
Thank you. Thank you.
Great. To everyone watching, thank you for tuning in. Do like, comment, subscribe, and click the bell icon so you don't miss the upcoming episodes. See you in the next one.